We're actually announcing our annual results next Monday. What I've always tried to do is to make sure that we communicate as much information as we can in our trading statement. So basically, this presentation is based on our trading statement in January. Okay, so as you would imagine, I won't be talking about the P&L at the moment. But fundamentally, what we put in our trading statement back in the 9th of January pretty much covers the performance of all the key performance indicators for last year. So that's the first thing there. I probably ought to give you a bit of a background on me. So I'm the founder of the company. Started the company in 2001 with my wife and a couple of friends. We bootstrapped it with £1,000 worth of share capital. That's kind of basically at the moment. At that time, I found it difficult to raise any capital because it was seen to be a very competitive environment. It's a very competitive environment today. It always has been. But probably they did me a favor because we just went it alone and funded the company ourselves. In terms of the ownership of the company today, the original founders, between us all, we have just under half, about 49% of the company. Other institutional holders, I think probably about 40%. I mean, I always think I could probably call 93% of the equity in our business in a morning, by making phone calls. So it's a relatively tightly held stock. So I founded the company in 2001, and in 2021 I retired when I reached the age of 65. I was then a non-exec for a year, at which point I thought it would be a good idea to step down and let the board carry on. And just 6 months ago, I decided to come back again. So I'm now executive chairman of the company. So effectively, I've had a sort of two-year gap of not running the company. I'm now back as executive chairman since September. So that's the background to it. What we do, I've got one slide. I'm going to move on to one slide I've tried to sort of encapsulate what the company does before I get onto that, because it's a little bit busy, to explain what we do. What we set out to do originally was to provide a subscription-based service to typically owner managers of small and medium-sized companies working in fields such as electrical maintenance, heating maintenance. So you're talking plumbers, shop fitters, landscape maintenance, any small to medium-sized company which has a mobile workforce where they have people who take vans home at the end of the day. So they have a van in order to be able to get from job to job during the course of the day. They take the van home at the end of the day, and then they go straight to their first job the following day from home. So typically where vehicles are not necessarily based at the depot. And what our system does is to provide them with information about what their people are doing during the daytime. So just sort of clear up, often people think that maybe our typical customer is a courier or delivering products or whatever. Yet we do have some customers like that. But actually, fundamentally, our business is about the man rather than the van, is the kind of the way I look at it. So our customers are trying to get more done each day from their mobile workforce. So that was it. I think what was different about what we were offering in 2001 from other players in the market was we wanted to operate it as a subscription model. So the products that were out there were typically hardware products that would be installed in the customer's fleet. And then, I mean, in those days, some of them would transfer information by VHF radio or whatever when they got back to depot. And our competitors were selling servers, which they went out and installed and maintained and so on. And clearly what we wanted to do was to launch a web-based service. So to use the internet, an application service on the internet, to actually have control over that communication by taking on board a wholesale agreement with Orange as it was then, or EE as it is now, paying a fee to EE, and charging our customers on a monthly basis. So, and in that way, establish a subscription business. It was something that it had always appealed to me, having been in hardware technology sales for many years and development, to have a business where you, bluntly at the time, sell a product to the customer and then charge them for using it, which is what we did. So this is, I'm probably a little bit light on slides about what we do, which is why I've given you a lengthy intro. So this, I'm going to try and explain exactly what we do with this and the benefits for our customers. So we fit, it shows a little green box, but it's actually a little black box, as you can imagine, that we install in the front of our customers' vehicles. It uses GPS and it uses GPRS or 4G to communicate the data back to our servers, SQL databases. It's been like that for 20 odd years. And from those databases, then we use that data to deliver operational information to our customers. And this is where it's really important to say it's about the man rather than the van, because all of that operational information is geared towards, for example, a landscape maintenance firm. It might be, how much time did a particular worker spend at one particular park or site or something, so they can use it for job costings. They can use it for working out overtime. So it's, in some ways, it's a glorified time recording system, but in other ways, it goes much further than that, in that we're not just looking at how long somebody was present at a particular site and at what time they got there and what route they took as well. But we're also, because we have accelerometers and other devices in the device, we are monitoring how they're driving. So we're monitoring their acceleration, we're monitoring their braking. We're also looking at, something that we developed over 10 years ago, particularly in the UK, for example, we have so much data coming into our systems, we're able to look at each road segment around the UK and map statistically all the drivers that we have on our database that are traveling across those roads, and see not just how the driver's doing against the speed limit, but we can also look at how they're doing against a distribution of our other drivers on the same road. And that's particularly important in, for example, country roads, where actually judging somebody's risk profile against where they are against the speed limit isn't really adequate, because there are an awful lot of country roads where the speed limit's 60 miles an hour, and actually it might be dangerous to be traveling much more than 45 miles an hour on some of those roads. So there's an awful lot of sophistication in the system and the tools that we provide to customers that goes way beyond just where the driver is and how long they're there for. But nonetheless, we have this suite of web-based software that we provide. We also have mobile apps, obviously, the customer can use. More recently, we've launched something which our customers can have their drivers use to record their daily vehicle check. So they can walk around the vehicle in the morning and do all the things that they might otherwise have had to record on paper or whatever, but they've got a definite record that the driver's checked that the windscreen wipers work, the washers work, the tires, the tread on the tire is adequate, and so on. When I talk to customers, one of the things I try to emphasize is that the biggest financial benefit they're going to get out of our system is increasing capacity. It is getting more done in the day. And I mean, I'm talking 20 years ago, the first time a customer explained that to me, he said, I have completely fixed the 100 miles from Spalding problem. And I didn't really know what he meant by it. I said, well, he said, well, the problem is on a Friday afternoon at 2:30, I've got a job that comes up in Spalding and I call around my drivers and they're all 100 miles away. And he said, what I've been able to fix with your system is I can say, you're just down the road from Spalding, can you go in and do this job? And so that has a double benefit, because not only is he going to get another invoice raised that Friday afternoon for 150, 160 pounds or whatever it might be, but he's also not going to pay overtime rates on the Saturday for doing it, right? So that's the first thing, increasing the capacity. Second one is reducing overtime payments, and it doesn't take an awful lot, 5 or 10 minutes. of overtime a day, per day, to add up in order to pay for the system. Managing risk, that's a really important one, and I've already talked about that in terms of what we call our SafeSpeed database. In that a driver who's going, as I said, on a country road 50 miles an hour could well be on the 95th percentile. If he's on the 95th percentile of drivers going down that road, he is many, many more times likely to have an accident than somebody who drives it on the median of that speed distribution. That monitoring of braking and acceleration and speed, of course, helps enormously in improving fuel economy. A lot of our customers can report quite easily 6 to 8% fuel savings, and it's for that reason that we've been given the green economy badge by the London Stock Exchange. Fraud and wastage, sadly, are very much a part of our customers' businesses, and they have to try and cut it out. It can be really one of their guys saying, I can come back and do that job at the weekend for cash. And that has all kinds of problems. There are probably insurance issues for them. The guy will not only they lose the revenue, but they will also have their own tools, their own investment being used, and their own consumables to carry out a job which the driver would be carrying out for cash in his own pocket. And of course, as I mentioned, minimizing their carbon footprint, and we give them tools that allow them to calculate that and report on that. So that's what we do in a slide. In terms of subscription-based growth, as I said, we started the company in 2001. You can just about see 2002. I personally installed 4 units in 2001. I'm not sure I really knew what I was doing at the time, but it was, we basically launched the company and did everything ourselves for a while. We soon figured out that wasn't a good idea, and employed professional installers and so on. In terms of the development of the company, by 2010, we did a number of different things in 2010. We launched in France. It had been my plan for some time to launch the company in France, to have an offering there. We also, it was a pretty tough time, because if you can imagine, 2008 through to 2010 was a credit crunch. We had virtually all of our customers were in the private sector, in construction-related businesses. The end of 2008 was one of the toughest in terms of direct debits being cancelled and so on. We decided that we needed an extra string to our bow, and in 2010 there came an opportunity to get into the young driver insurance market. I'll come back to that in a minute, because we've actually pulled out of that. It served us well while we were in it, but we decided we wanted to get back to focusing on this. But we also developed a presence in France at the same time. In 2014, we launched we were floated on AIM, and we launched in the USA. And then 2018-19, we also launched in Spain initially, and also Italy and Germany. And as I say, the London Stock Exchange Green Economy mark. I think one of the things we've always been very proud of is that we consistently get very good rankings for customer service. We've maintained an excellent rating on Trustpilot. That's really important to us. And the Investors in Customers Gold Awards. So today, now at the end of last year, 266,000 vehicles under subscription across 27,000 clients. And all of the development right from the start has been in-house developed intellectual property. It is our own tracking system that we install. This slide hopefully gives you an idea of the business model. This is still, this is why I started the business in 2001. This is the business model I wanted. These slices show our recurring revenues by customer cohort. And what you can see, the black chunk down the bottom here, these are all the customers that we won between 2002 and 2010. And so what happens each year is we layer those cohorts on top of each other. That is the basic plan. It's pretty simple, really. And what I've put in the middle bullet point there is there are some, you can see obviously those slices get smaller over time. They get thinner over time. Now we have attrition, but our attrition rate, which is typically 12 or 13%, they would all decline an awful lot faster. So there are various positives and negatives there. The positive are that those customers who are in that cohort that stick with us increase the size of their fleet. So the ones that stick with us increase the size of the fleet. So that helps in terms of maintaining the size. And then one has to contrast that on the other side of it, that we have attrition, and also until recently we've had price erosion as well. So basically you've got repeat orders versus attrition and price erosion. But nonetheless, that's it. As you can see, our business pretty well spread across those cohorts. I did mention we got into insurance back in 2010. By the time we got to 2016, it was getting very competitive. It was very, very different from the fleet business. Whereas, as you can see, we have 27,000 clients in the fleet business. The insurance business was concentrated into a much smaller number of clients who obviously had a lot of clout, and there were some big competitors in it. And the products typically were coming out after 14 months. Young drivers change insurance. I mean, bluntly, nobody, even though it's my product, I know nobody wants to be tracked, right? So at the end of the first year when they came to renewal, those young drivers, if they could get a cheaper premium the second year, they'd have that tracking system out. So it just didn't fit with us having something in there for 14 months. And that has had, in terms of our financial performance, that has had an impact on how the revenues look. And what I hope to show here is that those green bars that show underneath underneath that, underneath it all, fleet has continued to grow. So the KPIs, and I say I'm not putting the, you'll see the financials on Monday. So, I'm not putting the financials in there other than, the figures that we announced in January. So fleet subscriptions in terms of new units, 64,000. So, apart from 2020, the COVID year, that unfortunately is, we normally achieve better growth than that, and it will be our aim and our goal to return to that. The fleet subscription base grew by 13%. Which is great, but again, we would hope to see what we could do with that in the future. The customer base by 9%. Fleet attrition ticked up a little bit. I think particularly, the States contributed to that. I'll come back to the States later on. Now, price erosion has been running at 4.6%. It was stable last year. One of the first things I did when I got back to the business at the end of last year was to, basically we've had 2 years of the strongest inflation that any of us known for some time. So it just seemed daft to me that we hadn't actually put in place an inflationary increase. So I say end of September I was back, and we managed to get our customers' terms and conditions changed by the end of the year to notify them that we would put this change through. And as we said in the trading statement, we managed to get that price increase, and that will now start from, starting from February. So we're not reporting on that till we've been through one billing cycle. Our billing cycles are 3 monthly. So we'll give a better view on that. So, better late than never in terms of inflationary increase, I'd say. Our fleet revenues, 29.5 million. And last year, this is still reasonably pleasing that the fleet subscription base, the annualized recurring revenues grew by 2.2 million. So what I'm going to do now is talk you through our market. We're present in 6 markets. And I'm going to talk you through step by step each of those markets, how we performed last year, starting with the UK. And I think what I'd like to, our business, I've always tried to keep our business to being we're a one product company effectively, and try and keep it as simple as possible. But actually, in terms of marketing and sales, there is a degree of complexity in that each of those markets, we have a range of channels to market that we use, and typically 3, and in some cases 4. And that means if you're in 6 countries, effectively you've got 18 to 20-ish combinations of channels and markets. And much as from a marketing perspective, we try to use the same approach, but indirect marketing in France as we do in the UK or in the States, you can't. I mean, it's unfortunate. It is complicated. So, and the same thing with direct and price comparison leads. And so each of those channels, to some degree, has to be treated differently in each market. So whilst on the one hand, we have a simple business in that we have one product, on the other hand, we have a fairly complex, and I tend to look at it as, we have a lot of plates to keep spinning. And as soon as you take your eye off one of those plates spinning, you're gonna suffer. And that's what we fundamentally need to get back to doing really well. So in the UK, last year, new installations were comparable with 2022. Annualized recurring revenue sort of nudged ahead by a couple of percent, and the subscription base was up by 7%. So good progress in subscription base, but recurring revenue growth a little bit disappointing. And we've got some plans for further development of our channels to market. And one of the things I'll come on to later on, over the last couple of years, there has been at some core resources diverted to a product called Evolve, which I'll come back to in a moment, which I felt was detracting. I and some of the other founder shareholders, certainly, when we were kind of, I was exposed for that. I was on the outside. I was in the position of being able to talk to other shareholders to see what they felt about the situation, and I certainly got the impression that we all felt that the company needed to get back to its roots, really. France. France. I mean, I'm very pleased. I think fundamentally our strategy with France at the moment is try not to screw anything up. That's really what we need to do because it's going rather well. We have 4 channels to market that we use. So we have direct marketing. We do our own direct marketing that we put out there. We get sales inquiries coming in. The sales guys work with customers, convert that into business. That's effectively telephone sales. We buy sales leads in from price comparison sites, and we have a team dedicated to dealing with that. And that's really very different skill set from dealing with those inquiries that come in from our own direct marketing. The conversion rates are going to be an awful lot higher than they are with price comparison. And with price comparison, that same lead is shared with 5 or 6 other companies. So your guys, people need to be on it right away. I mean, they need to be on the phone like in 30 seconds, or certainly trying to get through to that customer. So we try and ensure that our systems are good at prompting people to get on with that. Distribution, indirect channels, we have a good distribution network. So across this 4, one of the great things, the final one, field sales force. In 2021, we recruited a field sales force for the first time in France, and that's worked out incredibly well. So I'm really pleased with the fact we have an even distribution of our business generation across those channels. In the USA, the performance, no doubt, is disappointing. There have been a few changes to the organization, and we've lost some key resources, but we will, start to rebuild that. So new installations decreased by 34% to 6,000. And, our focus is going to be regenerating and rebuilding that. And we did suffer some relatively high attrition in the States as well. The new territories, Spain, Italy, and Germany, we entered those 2018, 2019, really look quite exciting to me anyway. We made good progress in revenue and the subscription base. New installations increased by 19%. We're going to focus on seeing what we can do there. Certainly, I would say in some senses, certainly in France and perhaps in Spain and Italy as well, the competitive situation is, a bit more favourable, perhaps even than the UK. So I think growth in new subscriptions is scope for improvement as we build out our direct and distribution channels. We've been rather focused on just one of our channels. So we got the opportunity, our business, I'm not going to take you through our business strategy today, but one of the first elements is development of our key markets. And by that, we mean, certainly for the foreseeable future, the 6 markets where we're already present, developing out the channels that we have in those existing markets, giving the best return. So further investment planned there. So then that brings me on to, I did mention Evolve and the Kinetic acquisition. We have always, our growth has always come organically. During my absence from the board, there was an acquisition made, and I can still say, sadly, that our revenue growth has still come from organic growth. Anyway, the Evolve EV transition software tool, what the intent of it, and certainly it was well viewed by certain customers, but tended to be a relatively small subset of our UK customers in the public sector. And typically that's where there was interest in it. But it's a tool which assists in the transition for those fleets from internal combustion engines to electric vehicles. And to some degree, what we found was, firstly, the demand for that got reduced by the deadline being put back to 2035 in the UK. As soon as I got back to the business, one of the first things I did was to have a sort of technical review of it, how it was doing, and a commercial review. And really, we found that we felt it needed fairly substantial investment, and that there wasn't the scalability that our standard product has. And that customer acquisition and support costs were going to be higher than probably had been anticipated. And particularly within the small number of customers that we won, the renewal rates and repeat customer usage were not great. So that was kind of my conclusion within a couple of weeks coming back to the business. Now, the company bought, I didn't know. I found out at the same time as any of you who are holders in the company. I found out at the same time as you, that they bought the company that had the underlying technology for Evolve. But the company itself had negligible revenue. We paid 2.5 million in cash. We paid, the cash purchase is 2.5 million euros, but some of that is held back with a potential 1.4 million euros earn-out. Roughly, we spent about 2.65, because of the cost structure of that business, there was approximately a cash spend of about 2.65 million pounds in 2023. And obviously we're working at the moment, I've said here, it's an absolute priority of mine to reduce the financial impact of that acquisition on the business as soon as I possibly can. And we have continuing costs in 2024 and 2025. We can't get away from that. We acquired legal entities in Germany and Hungary and had employees across 3 different countries for that business. Right. Okay. So I could talk about Quartix forever. Sorry. Anyway, so we are expecting an impairment of goodwill with that. A second thing that we highlighted was 4G migration in France and the UK that we looked at. In France, 2G networks will be closed in 2026, which is a lot sooner than we expected. So we are taking a provision in our 2023 results on that. The UK, we continue to monitor the situation. We think the UK is slightly different because there are a lot more fixed assets out there using 2G technology. product enhancement. I talked about our products generally. The systems that we provide. I don't probably need to go through that. My immediate objectives are really to increase the rate of customer acquisition, the net increase in customer acquisition, accelerate that, to reduce the cost of Kinetic, grow our ARR faster than our overheads, which is absolutely key. Channel effectiveness, I've talked about, manufacturing costs, and the improvements to our user interface and mobile app that I mentioned. So in summary, I think we have a very strong cash generative business. We have a very competitive product offering and an excellent reputation for customer service. And hopefully a renewed focus on our core business will underpin profitable growth in all 6 target markets for the future. So, and our full report and accounts will be out next Monday. That's it.
Thank you very much. We've got time for a couple of questions, but it might be that I have to push some of those into the buffet. Are you going to be with us?
Yeah.
Fantastic.
Why is Europe doing so well, and conversely, why is US not doing so well?
Well, the US, we've tried a number of different approaches, and there have been some changes in the organization and the structure there. I mean, it is fundamentally a different market. We are keen on getting to grips with that. We are looking at how we go to market and looking at some indirect channels to see if we can improve things there. I think the competitive situation in continental Europe is somewhat more favorable.
Yeah, just 2 quick questions. You talked about having a field sales force in France.
Yeah.
So is your intention to, and that seems to work, do you use that in other places? And exactly what do they do?
Once we get to a certain level of brand recognition, I would say, in a country, that was one of the things that worked very well in France. We had good field sales guys coming to us, actually.
And do they bang on doors?
Well, they do, yeah. They find their own leads, yeah.
Okay.
Yeah.
And then you track the van. Have you ever considered trying to expand it so you track the man?
No, yeah.
Well, there's a couple of sensible reasons, because a lot of these guys are working on their own. So lone worker situations come into it. If somebody's lying in somewhere, electricity substation or something, and there's nobody else with him. The other thing is, is he actually working, and is he actually resting when he should?
No. Look, absolutely, there is a need there, but it's not for us at the moment. Yeah.
Great to see you back.
Thank you.
I'm a recent shareholder. How long are you back for?
Well, okay. I'm 67, and I intended retiring, obviously, a couple of years ago. But I think I have a really good team under me. I mean, bluntly, they're doing the heavy lifting. So I don't know. I need the company to be back and heading in the right direction.
You mentioned 4G and 2G networks. You didn't mention 5G. I know my internet telephone supplier is getting rid of everything bar 4G and is trying to migrate us to 5G. In fact, where I live, there's no longer anything but 4G at the moment and 5G at the moment.
Yeah. I mean, in many instances, 5G does sort of fall back on 4G anyway. But 4G, in a sense, it's kind of the new 2G. So people are trying to get rid of their 3G networks, but 4G is kind of taking over as the kind of workhorse. And we don't actually transmit very much data at all. Every report we have is that there's fairly long life ahead of it for 4G.
I think I missed this, but is there any development going on in terms of extending your software? And can you say anything about your software development team, or is it outsourced?
Oh, no, it's all in-house. In-house, yeah. So, originally based around sort of the Leatherhead and Southampton areas, but they're all working from home these days. Yeah.
You started the company in 2001. Has technology moved forward a lot? And is there competitors coming on the scene? You know, Find My Phone can tell me where.
Yeah, absolutely. So we've always had very, very strong competition. It's been a very competitive industry throughout. The thing is, I mean, just in terms of a phone, very quickly, as an example, if our customers want to know that their driver is not using their van at the weekend to go to a job and do it for cash, well, he's not going to find that information out from tracking his phone because he'll leave it at home. Yeah, just so.
And competitors?
Oh, there are loads. Yeah, there always have been. I mean, that was why I couldn't get funding in 2001. Yeah. Well, it comes down to marketing effectiveness, I think. So, we believe that we have, some of the best service in the industry, and we're very cost competitive. And fundamentally, it comes down to marketing effectiveness and getting to the customer before anyone else does.
I'm curious about whether or not the Evolve and Kinetic sellers ever got their earn-out.
Well, the earn-out's over a couple of years, and they probably won't get much, no.
And one from me, if I may. It would seem logical that there's an adjacent market for you in logistics for your customers in the whole planning and organisation side of things. Is that somewhere where you've...
I really try to keep things simple, and we have a huge market, I think, to go after in doing what we do. And I think that's part of the reason why our customer service ratings are so good, is that we try and restrict what we do, really, but we try and do it well.
Fantastic. Thank you very much indeed, John. That's a fascinating.
Thank you.